welcome back to The Next Big Thing. My name is Chris Gennady, Global Head of Research at WisdomTree, and today I am joined by repeat guest Blake Heimann, also of WisdomTree. Blake and I do a lot of looking at and studying the AI topic for the firm, talking to investors all over the world about what we're seeing, trying to figure out what could possibly come next. Before we begin, I do need to state the following to clarify: the views and opinions expressed in this podcast are those of WisdomTree and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The informations and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. And so, with that said, we find ourselves in a very interesting position. We're recording in early May. And one of the fascinating things, Blake actually, we use Microsoft Teams at WisdomTree. So Blake, I remember, sent a Teams message. It was either this weekend or the prior weekend. So it's a 7-day-a-week AI journey for us. And he was mentioning that Apple had put out into the world a large language model of some sort that didn't necessarily, I mean, Apple sneezes and there are 15 headlines. So you would have thought Apple putting a large language model out would have gotten a bit more attention. And the day before this recording, Apple put out a new M4 chip, which was featured in some new iPads. And I read an article the day before this recording that Apple was focused on designing chips in servers. And kind of the interesting thing when you step back and you think about last year, it was all about the Magnificent Seven, largest companies in the world. This year, Apple, with its exposure to, say, cell phone demand in China, not great. Any exposure in China, at least so far this year, is less than great on the spectrum of things relative to other trillion plus market cap companies. Apple has not performed amazingly well, but at the same time, in their most recent earnings, I believe the figure was 110 billion. That's billion with a B in terms of share buyback. So the firm is still making a lot of money, making a lot of investments, showcasing its ability to design chips. And Blake, I would say this could be an entree for you to give us your thoughts on, say, this, again, evolving picture where, yes, you still have the biggest companies in the world, including Apple, on one side, and then you have this long tail of very interesting, more emerging companies, some not necessarily, generating the revenues all the way down to the net income line of profitability, but still doing very interesting things. I mean, what are you seeing right now, May 2024?
So yeah, I think what you highlighted with the overall Apple release of the LLM, I think that that's quite profound in the sense of focusing in on the on-device in the on-device space, because Apple's been relatively quiet around all of this. So I would say one of the things to pay attention to is paying attention to how this technology is being integrated. There's a little bit of vertical, a little bit of horizontal, but vertically, you can kind of see that Apple now, designing their own chips, releasing LLMs, and keep in mind that the LLM, the technology itself, can be optimized for the silicon it's running on. So being optimized for a particular chip. So the fact that, they've been very, very quiet about this, and then they put out a subtle blog around this new LLM that is, I believe, quite smaller number of overall parameters. And I think the terminology is called Occam's razor, whereas you want something that's essentially the minimum number of parameters, the most simplest solution to the biggest problems are the best solutions. So the smaller parameters, I know everybody gets excited about parameters and LLMs, but the fact that if it has smaller parameters and good performance, and if they can optimize it, or it is optimized for their silicon, that is quite a interesting thing, or an interesting opportunity for them that a lot of people haven't really baked into Apple necessarily. So I think they've kind of been operating a little bit under the covers, if you will. But I think to your original question, Chris, around the space in general, with how diversified it is. So far, we've seen the large cap players and the cloud computing type of platforms, and those that have the capital and the resources to actually train these LLMs from scratch, are the ones that are essentially winning at this point. We've seen a little bit more of a market turnaround, but we have to always keep in mind that the space is extremely diverse, and to get to the point where you have an LLM that is trained and can be ran on this silicon and actually solve problems that regular people like you and I are actually benefiting from the efficiencies of that. There's a lot of inputs that actually go into that, I'll say, value chain before you even get to the stage where you can actually have say a GPT running on your iPhone to automatically give you email updates and summaries, et cetera, whatever it may be, like a Copilot like experience.
It is so. Microsoft has done a great job getting that word out there, getting that thought process out there. The idea not of AI taking over, but AI sort of in the right hand seat. You're the still the pilot in the left hand seat. You're still in charge, but the co-pilot is there backing you up with potentially perfect recall and knowledge of various things. And Blake was using the term co-pilot to describe. I mean, that's how these things start. He's describing another company with Copilot as the main term. And so you sit here and you recognize as you're thinking about the ways in which an investor might be playing artificial intelligence. Largely, so far, what we've seen in 2024 has been the biggest companies, in large part, are still probably giving you the performance advantage over, again, those more emerging, those newer companies. The background of interest rates is always there. I know our focus is artificial intelligence. Our focus is the technology. Sometimes that means cybersecurity. Sometimes that means machine learning deployment and operations. It could mean a whole host of things. And the unfortunate thing that you tend to see is it's not always the artificial intelligence results or even the business results that drive the markets. The past week being one example. Where you look back in early May at the jobs report, you look back in late April, early May at the Fed, announcing the current policy stance. These things have as much or even bigger influence on what you ultimately see. But stepping into some of the other large companies, Blake, I mean, a company that I know you and I spend a lot of time talking about is Tesla. And you can think of Tesla, and Tesla sets it up so that you can think of multiple different possible verticals. And I say possible for a very distinct reason, in the sense that what we know today is they make and sell vehicles. They're sort of changing, if you've been watching, changing the way in which they monetize full self-driving, even though full self-driving might be a misnomer and there might be some investigations going on about whether or not that was properly disclosed. And then you've got the robotics and Optimus area, which is a fascinating area, but you don't necessarily know all the steps to get from where we are today to full monetization at scale. And similarly, in early August 2024, we expect to see the robotaxi, which it's to our understanding the unveiling of a prototype, not necessarily robotaxi at scale. And you wonder, are they going to pursue a path that looks similar to what Uber did at various points in its history, where they just sort of deploy and apologize later? Or are they going to do a path where they actually seek to get, the appropriate approvals? So far, full autonomous driving, if we're honest about it, has felt like it's pretty confined to certain areas of San Francisco. Maybe not necessarily with Cruise anymore, but Waymo is certainly there, and certain areas of Phoenix. That's where we know for sure Waymo vehicles are out there. We're not aware of a Tesla fleet of cars without drivers in them currently deployed. But Blake, when you think of a company like Tesla, where the share price is moving around multiple percentage points on a day, both directions, what are some of the highlights that you might see looking at such a stock?
So I think that's a unique one to definitely pick out here because they do cover a lot of things and obviously trading much more with the due to their capabilities and with full self driving and actually some of the challenges that they've experienced in China, et cetera. But I think when you're thinking about the technology and the interesting thing about it, and I'm sure people have heard it many times before, but the fleet that they have and the amount of data that they're extracting from all the people that are currently driving them, even without the obviously the full autonomy, is really important because obviously the data itself is the fuel for these machine learning models. All the underpinnings that actually allow for this technology to operate and function well. And this is an area that also has very limited room for error. So when you are talking about full self driving, you almost need to be even more accurate with all the predictions and all the predictions that are baked into the underlying models that obviously are making the decisions to turn, to stop, to go, et cetera. Whereas if you're thinking about a chat bot or even just your typical interactions with Chat GPT, it might hallucinate once in a while and give you a bad answer, but we're just kind of using it for text summarization, other use cases that might be helpful from starting to help build out some new ideas or whatever. For maybe it could be some written work, but not putting somebody's life on the line. So I think that that's one big thing in the self-driving space that really differentiates it from some of the other use cases that we're looking at least in the from the productivity side and the LLM side of things.
I do love the story of you're putting the cars out there. Every day, the cars, appropriately equipped, are generating something on the order of 4 terabytes of data. Every night, that data is getting sent back to sort of the centralized systems. You hear about the Dojo processor, which is yet another example. This is a key example that we're going to have to talk about, this idea of customized silicon fit for purpose. All the big companies, for the most part, are doing this. Dojo is the name of Tesla's, and you sit there and when full self-driving version 12 came out earlier in 2024, the idea that you were able to step back as, say, people and not necessarily need to define certain images as a person would, but rather letting the system guide you to what a stop sign is or a traffic light or certain other things. The system itself sort of picking up on that task and recognizing, there are self-driving vehicle companies out there, companies like Aurora and Too Simple and a whole host of others. And sometimes you hear they're doing a lot of, say, simulation where they recognize, look, the way that these systems are, they have to drive a few billion with a B miles to come across all the various scenarios that make you comfortable enough that you have a safe system. Tesla's approach, it feels like, not that I work at Tesla, but it feels like you sell a certain number of cars, you get a few million vehicles on the road. Those few million vehicles are allowing the models to learn and improve from actual people at the wheel, possibly experimenting with the advanced driver assistance systems that maybe full self-driving would be fully characterized today. And so you've got these sort of two different approaches. One approach is very real world focused. One approach is very almost like a video game, simulating what it would be like to drive, and trying to, both approaches are trying to get us to that point where, and you don't know, maybe the goal is just safer cars still driven by humans, which is still good. Any incremental step towards greater safety is still good. And it's funny the degree of safety focus that we put on autonomous systems when, I'm currently physically in Las Vegas, so I see the decisions that actual people make. We don't, as a society, always make the best decisions, but we hold our, autonomous systems to a much higher standard than we hold ourselves to, funnily enough, and that happens on the road as well. But getting safer and safer roads and more efficiencies could be quite interesting. And there is that sort of holy grail where maybe people who buy these cars are able to farm them out, recognizing that most of the time or in a 24-hour day, the general person is not behind the wheel driving. Most of the time, they're sitting in a room, they're lying down, they're on the couch, they're cooking, they're walking, they're doing all sorts of other things. The car is just sitting there. And so, if the car could in some way earn money, that is a very, very fascinating prospect. We would love, Blake and I would love to live in that world. It's just we recognize it's not easy to get from where we are right now to there for many different reasons. But it'll be fascinating to see if we can make significant progress towards that end over the next, say, 5 to 10 years. But but Blake, I'd be curious to get your view. So, just as a little bit of background, Blake actually is more on the developing engineering side in the sense that he has taken classes and has a master's in artificial intelligence. So, relative to me, who does not have those classes under my belt and has never written a line of code in my life, there are certain areas of AI that I think Blake can give all of us a better understanding of. And one of those, and Meta is trying to at least own the narrative, or and you've seen if anyone's familiar with the Dwarkish podcast, Mark Zuckerberg himself was on there for about an hour, getting into a lot of detail, much more detail than CEOs of that stature would normally go into in the weeds of some of Meta's Llama models and some of their plans. But it relates to this whole discussion of sort of the bigger centralized models of AI operation versus the customized open source models. And Blake, I would love to get your impression of where we are in that discussion and what people might reasonably expect to see in the coming weeks or months there.
Yeah, so I think one of the things that I mean, we've seen some of it in some of the performance in some of the stocks that do offer. You said you highlighted the word operations. I would say like ML operations type of solutions, because at the end of the day, to train these very large models or to even just train very basic ones and to execute them live in production for any actual use case that could solve a problem in a firm, there always are guardrails. So, like we talked about this, the self-driving guardrails being, very tight. You can't have a lot of error there because of the impacts. Maybe in a business sense, that's maybe a little bit wider, but due to the regulatory environment, you're always going to have some limitations. Now, I can't speak directly to what is happening at Meta and what is happening at each of these firms when they're actually releasing, say, the next version of Llama. But what you can, at least take away from their high level process is that there is some level of review and some level of version control and other processes that are in place to make sure that when they are testing it, they are evaluating it for other extreme scenarios to make sure, one, the performance is good, but also, especially with in terms of language models, there's nothing that's going to come from it that could be uh, you know could be perceived negatively. So in that sense, if there's, people have always tried to prompt these things saying horrible things, trying to, get some sort of response, and obviously throw it all over Twitter and cause all kinds of problems. So there are restrictions in place. And there are many firms that are not only, approaching this from the ethical side of things, but also just from the operational side of things of training, hyperparameter tuning, testing to make sure that these scenarios don't happen. A lot of the stuff that happens under the covers, because like I said at the very beginning, it does take a lot of investment and a lot of people and a lot of experts and compute to do this stuff.
And speaking of that, I force myself as we go and we speak to investors about these topics. There are things that the companies themselves are indicating, and on the spectrum of what is completely known as the truth of what's happening and what is speculation or informed speculation, analysis-led speculation as to what might happen. Where we are presently is that it feels as though the capital spending, is still priority number one across basically all the big companies. Because when you hear specific designed semiconductors, that costs a heck of a lot of money. When you hear further data center compute resource build outs, that costs a heck of a lot of money. You're seeing, Microsoft feels like they're on a bit of a world tour. In the last few days, I saw headlines referencing certain parts of Asia. So it's clear it looks like certain data center projects are being initiated in certain parts of Asia. Certain data center projects are being initiated in Wisconsin. You've seen the CHIPS Act types of things happening, trying to inspire, say, a greater degree of production in the United States. In recent months, we've gotten a lot more announcements on the CHIPS Act. It was quiet for a while, and suddenly it feels like the momentum has built, so that you're seeing a lot more dispersing of those funds. And so you're in a position now where what we know to be true is something on the order of 175 to 200 billion is going to be spent this year to sort of expand largely various compute resources. And that was not a zero figure last year, and it won't be a zero figure next year. And that obviously feeds into what we're going to see in 2 weeks from NVIDIA. We're about 2 weeks ahead of, as we do this recording, NVIDIA's earnings coming out. And I'm sure everyone believes it'll put strong numbers on the tape, as it has in all the recent past quarters, going back a year. It'll be interesting to see, comparing to what was a blockbuster quarter last May. So it'll be the first time it's comparing year over year to a previous blockbuster blowout ahead of expectations. But frequently, Blake, it's more interesting in discussions to sort of think about semiconductors beyond NVIDIA, because there's a whole broad ecosystem. There's a whole group of companies where, whether it's electronic design automation, companies like Synopsys and Cadence, which are involved in helping design specific circuitry, specific capabilities directly onto the chip, whether it's Taiwan Semiconductor, where we know most of the most advanced process fabrication still does occur out of their Taiwan facilities. Maybe one day some of that will occur in Arizona. We'll have to see. Um, Whether you're hearing about Intel, Samsung, SK Hynix, Micron, the list goes on, and the type of chip that each of these companies are currently very very good at or less good at fabricating and designing ebbs and flows. But I'd be curious, Blake, to get your take on the state of semiconductors, recognizing we've seen NVIDIA have its blowout, say, period. Part of that might continue, but they're probably not going to add another 3 trillion or 2 trillion of market cap from here, at least not in the near term. And so, what are interesting areas that you see in the broader semiconductor ecosystem?
Yeah, there's first off, there's very many. You highlighted a couple that I'll say are very strong. I think that, like you mentioned, Synopsys and Cadence, very, very important in terms of designing the most advanced chips, because based on what we're hearing from industry analysts, including just even on the earnings calls, they're saying that you flat out can't design the most advanced chips without these firms. So essentially, if you're thinking that every chip that NVIDIA needs to create, including the Blackwell, had to use the software that Synopsys or Cadence are providing to actually be able to compact all of that, all of the the different transistors and all the circuitry that you described before into that very, very confined space, to make sure there is enough compute, there is enough memory, it is being passed back and forth fast enough to actually do the computations, and the fact that they're using AI to even optimize for bringing all this stuff together in a very efficient way in a very extremely small space, I think is quite profound and quite exciting. So I would flag that as definitely one area, the semiconductor design space. There's obviously edge computing and the concept of bringing AI on device, and I think that's potentially one of the next areas. But I think before even going there, I think a lot of the talk recently, and we've seen it in earnings calls and some of the price action with Micron, with how they've started to indicate, potential turning in the semiconductor memory cycle. It's interesting because memory typically is viewed as a commodity in a way. So you end up having these cycles, and the view is that anybody, they're not necessarily going to an end consumer that is buying the actual memory chips to be incorporated onto an integrated circuit, isn't necessarily going to care where it's coming from. They just need the memory chip to serve its purpose and they move on. But the unique thing that has happened recently is the release of the high bandwidth memory. There's really only a handful of firms that provide it, the main two being Micron and Samsung, and those are the chips that are essentially essential to be serving the purpose of allowing the memory to be transferred fast enough and in large enough volumes to the chips that are being used with NVIDIA to the GPUs that are being incorporated into these data centers. So now you're starting to see a couple of players in the memory space getting a little bit of an edge. And based on the earnings calls, they kind of highlight that it does take some level of expertise to develop these chips. But speaking to industry analysts, they make it sound as if HBMs are still commoditized. Firms just haven't been able to ramp up quickly enough to meet the demand that is tied to the NVIDIA GPUs that are out there. And essentially the only two that are capable of doing that are Micron, SK Hynix, only three: Micron, SK Hynix, and Samsung. So I think that's a very interesting space. And if the memory cycle is turning and high bandwidth memory is harder to actually produce than maybe is perceived, this could be a new area for these types of firms to kind of edge into becoming more grab more of that AI beta, if you will.
It's amazing to consider that when you dig into the semiconductor area, first of all, even if every headline focuses on NVIDIA, focuses on artificial intelligence in a variety of ways, if you were to say to someone, do you think these AI chips, these Blackwell chips, 30, 40, 50,000 per unit, do you think that these are the majority of the semiconductor market today? And some people might say yes without, digging into the detail. And you'd realize that we're on a growth track here where over a period of years, probably starting last year, going to 2026 or 2027, we may get to say 15%. The overall size of the chip market is in the range of 550 billion, give or take. It goes up and down depending on the year. Mostly up over longer periods of time, but we're edging up closer and closer to a trillion in say overall market value. And maybe we get there by the end of the decade. But you step back and then you say, is most of the money spent on these AI accelerators, say super chips? And we're not at that point yet. Now, most of the growth, it's similar to other, when we talk of those large companies, not all of those large companies. Think of Amazon. Amazon Web Services is a part of a much broader business. And sometimes you get the feeling that Amazon is trading on the strength or the weakness perceived in Amazon Web Services. But if you were to say, does Amazon Web Services make up the majority of Amazon's web revenue? Not yet. Maybe at a certain point in the future, but that's not the case yet, and that is absolutely the same with say Taiwan Semiconductor, where they're making all sorts of different chips. We've been focused on it. It's almost if you see COWOS, chip on wafer on substrate, Taiwan is uniquely positioned to be able to do these sort of packagings where you've got the GPU, the CPU, the high bandwidth memory. It's all on a substrate so that the data can, at the fastest possible, most efficient speed with the lowest latency and heat dissipation and all of that, operate in the best way possible. Because you're constantly, if you're trying to run and train a trillion parameter model, you're running a lot of data between all these different elements. And the better job you do with the packaging, and the packaging in recent years has been more of the bottleneck than say making the chip. So we have to think both of the packaging as well as the chips. and recognize that there is a lot that goes on just to assemble these things that Blake was talking about. Now, in that area of the market, you're seeing certain firms like Intel throw the word. I was looking up yesterday because I was curious as to what it meant. If you go into these spaces, you'll sometimes see the word angstrom, and an angstrom is apparently 1/10 billionth of a meter. So if you hear the word nanometer, 2 nanometer, 3 nanometer, 4 nanometer, that's 1 billionth of a meter. And so where we are today with chips is 4 nanometers, 5 nanometers. That if you have a new iPhone, that's most likely what you would find in your iPhone. So 4 billionths to 5 billionths of a meter. What say Intel is aiming towards, because you don't hear a lot about Intel GPUs today, but it feels like what they're aiming towards is trying to leapfrog and say we're going to be ready when we hit angstrom scale. And I've seen on their website 18 angstrom scale, which might be 1.8 nanometers at the end of the day. And so whether or not they're able to hit that, they in past years they were not necessarily able to cleanly, easily, and efficiently hit 7 nanometers. Remains to be seen. But you do see this ever ongoing march of Moore's law. This idea every 2 years you're getting more and more capable chips. Maybe not twice as capable year by year, but ever more capable chips. That still is going. It's not dead. But at the same time, you're seeing other interesting architectures. A company I'm personally fascinated by is Cerebras, where they basically say, let's expand the aperture, make a much larger chip. You can potentially train AI models on a single chip, because the chips are so large, and that's just a complete other way of doing it. There's no right or wrong in this. It's different trade-offs, different use cases. What you tend to see is more and more specialized uses, and something that Blake and I spend a lot of time talking about is the bigger chunk of the chip market. So if people in 2024 and 2025 are going to get excited about the semiconductor ecosystem, we don't think it's going to be on the back purely of GPUs, NVIDIA, AMD, etc. We think what has to happen for that to be true, for that thesis of the semiconductor ecosystem broadly doing well, is that we see a resurgence in, say, hardware updating, where people say, you know what, I've seen a new, whether it's a Lenovo, HP, Dell, Intel inside these kind of laptops, which might be using Qualcomm processors, other kinds of processors, where there's now AI built into and able to run directly on the laptop, or AI built into directly able to run on the cell phone, which has already been announced by Huawei, Samsung, Pixel. Apple is hinting. We talked about Apple already. They're hinting towards announcing something. We think iPhone 16 is going to have AI on the device. But this idea of AI on device at the edge, we think this is the thing that's worth getting excited about now, recognizing we're going to hit on some other topics which we honestly, similar to say robo taxis taking over the world. Fascinating to consider, fascinating to think about that journey from where we are today. Don't know when the journey ends. AI on smartphones and laptops. This is something you could see later this year and into next year. Blake, what are you seeing in this sort of AI on device movement?
I think, I mean, in terms of seeing, you're starting to see Qualcomm talk about it quite a bit more and being quite optimistic and starting to talk about this being a new wave of demand here. And that's why, a lot of these announcements are coming out around these AI PCs, and this actually being a point where somebody says, hey, I had a great experience with my previous device, whatever it was, but actually, now being a point in time where the upgrade is large enough where it would increase demand further to actually lead to people. I think I still have the iPhone 12 or 13 or something like that, a few years old, and I haven't felt the need to actually upgrade at this point. But if there was an AI capable device, I would definitely upgrade, because you start to see the benefits. We're currently using, Copilot on our Windows 11, and you can see the benefits. I know I've become more efficient using that, particularly with programming. So I think that in itself when you are talking about the overall consumer demand for these types of things. I think that's interesting, and I think it also just serves a much bigger purpose, because when you think about the data privacy issues, a lot of firms and individuals are concerned with the fact that when you are interacting with these uh, our large language models, machine learning platforms, whatever it may be, because they're all running in the cloud, you have to send your data to that platform, which means it's living elsewhere and you don't have control of it. So being able to run something directly on your laptop really changes the game in terms of privacy, because you now can control your data and you can run everything locally without going into a very big agreement or whatever it may be, and forming some sort of paying for some sort of platform necessarily. So being able to run open source, Llama on your laptop, and to be able to run Copilot without sharing all the bunch of information that you're inputting, I think sounds quite amazing. And that's not even speaking to all the other underlying new applications that can be formed and optimized and just running underneath the covers without actually leading to your computer or iPhone wearing down the battery life, wearing down your actual the CPU and GPU that are driving your obviously the visualizations and your other typical applications that you're working with. So being able to expand to a point in time where there is enough compute and resource on device to not have these challenges and be able to run AI, a compute heavy thing, I think is quite exciting.
It is noteworthy, and you sort of step back and you think we're in this phase where, similar to the 1990s, when we started to recognize the internet, we started to say the internet is going to lead to a number of different possibilities. And I remember thinking of the infrastructure. You start maybe using the phone lines, and then you start with the DSL, and then you start going into the fiber optics. And if your house, I grew up in Connecticut in the United States, so when we had the option to get the fiber optic in, suddenly, if you wanted to listen to a song, it wouldn't take 2 hours to download one song. I mean, this is the reality that you have to sort of think back and say, wow, like, yes, it did used to take 2 hours to listen to one song. I mean, we forget about that in a Spotify or a Netflix world. And it feels like what we're dealing with now is recognizing that artificial intelligence, though it requires a lot more computational power, there's a lot of things that will be able to be done, some of which we can start to predict. And we're going to use this next, say, 20 minutes of the discussion to get into some of these areas. And some of which, admittedly, we probably can't predict, because the thing that I know Blake and I talk about all the time is the smartest decision in hindsight. You step back and you say, ChatGPT comes out, and you put your entire portfolio into NVIDIA. Now, I didn't do that. Blake didn't do that. WisdomTree didn't do that. So it's just humbling to realize, what seems obvious in hindsight. At the time, you're sitting there thinking, "Oh wow, this is like this novelty." It sort of gives you, the expression of a particular topic in the flavor of, say, a Broadway show or Shakespearean sonnets or whatever it might be, but you don't realize what it is that changes the whole world's perception of what AI can do, and what gets basically every CEO, CIO, C-suite talking about it on almost every quarterly earnings call. It being data, artificial intelligence, utilizing these services, thinking about the productivity gains. Now, something, Blake, that we spend a lot of time thinking about, but similar to self-driving vehicles, it's harder to place a timeline. And it's the trickiest thing, because again, we saw ChatGPT in 2 months, it had 100 million users. I mean, that's the ideal. Software, it can scale. If you have the right piece of software, they call it product market fit, you hit the right thing at the right time. The marginal user of that software, I mean, making those additional copies, it basically costs nothing to the company. Once the software is there, it's there. But you think of something like drug discovery, it is one of the most fascinating ideas, I think, out there. You look at a company like Exscientia, you look at a company like Recursion, you read about the logic that underpins what they're trying to do. It makes all the sense in the world, and you recognize, look, Copilot for Office 365 is nice, but getting certain new molecules, gene therapies, this is what really influences and changes people's lives. Using Microsoft Office is a bit better. It saves some time. Yes, it's productivity enhancing. But if you can help to cure a disease or at least provide a workable therapy based on some of this, it's a really incredible thing. But the tricky thing is the timeline because healthcare, biotech, it does not operate on the software timeline. If you're looking on a 2 month basis, you basically see no progress at all. Drug discovery currently, without these tools, takes something in the range of 10 years. Think about CRISPR. CRISPR 2012-ish is when Jennifer Doudna and Emmanuel Charpentier come out with the paper. The Nobel is awarded either 2019, 2020. It was during the pandemic. Walter Isaacson wrote an incredible book about this topic. And then you have a few further years, and last year, 2023, end of the year, you see CRISPR being approved in the UK and the United States for a certain therapy to combat sickle cell anemia, which is amazing. But you then step back and you say 10 to 12 years end to end. And that's an eternity in the thematic world that we're used to, where we want to see those revenue results now. We want to see those earnings results now. So Blake, when you're looking at companies in the drug discovery space, the AI aided drug discovery space, what are some things that you're excited about, and what are some things that you just recognize people have to temper their expectations on?
So I think what is exciting is, I mean, you kind of alluded to the opportunity here, and it really comes down to if you think about the drug discovery process as a funnel, and at the starting point, you're starting with, okay, I have this problem. You might be able to identify a couple genes that maybe are potentially causing it, or whatever pathways that are underlying the issues that people might be experiencing. But what you need to do is identify a drug, identify a compound that can then essentially fit into, actually, I think the right terminology is a ligand, if I'm not mistaken. So somebody with a science background can maybe reach out to verify that one. But essentially, when you come up with a drug, you need a compound that actually goes in and connects with another, I believe it's a protein, to then actually cause the pathway to change, to actually result in the cell dynamics changing. So that would, in terms of thinking about lowering your blood pressure, you take a blood pressure medication, it's a certain compound. What it's going to do is that compound is going to bind with a protein or another molecule in your cell to then cause a pathway to occur. That pathway is just a bunch of processes that are executed in a particular order that lead to the relaxing of blood vessels to then lower your blood pressure. And this is how medications are made at the highest level. And I'm not a scientist, but this is, the big picture. So when you're thinking about all the different compounds that you could think to potentially use to bind to whatever that target is, it's essentially an infinite amount. So if you're trying to explore an infinite number of possibilities, what is a good place to start? And this is where AI can really come in to enhance the process, because you're now taking what was traditionally a extremely hard computational problem to solve, which AI is uniquely positioned to solve these types of problems, especially in terms of the computation aspect of things. You start to actually narrow that funnel quite a bit, and that's what makes this so impactful. Is if there are ways to narrow that funnel to then reduce the time period, or maybe the time period is more dependent on the regulatory and the number of tests that need to take place. But if you can actually shorten that time period of starting from scratch to then getting a list of a handful, I don't know what number to say, but a smaller number of molecules to actually test and take into the lab that actually have a higher probability of success to get to the next stage, that's where you can really see massive impacts. And if you're starting to see that percentage increase at the early stage by even just a little bit, the impact itself may not be that big figuratively. Maybe something increases by a few percentage points, but because the percentage of success is so low, a few percentage points up from such a very small percentage point essentially could be increasing things by 50% magnitude comparatively from what it was before. So this is where things can get quite interesting, and this is why this space has tons of potential. But like you said, Chris, it's very early stage. There's a lot of partnerships. There's a lot of early stage companies exploring this. There's a couple different business models that are being used here, maybe like a more software subscription type of style versus just going for proprietary models, proprietary data, proprietary processes to then eventually hopefully get to the point where you have a $1 billion drug on the other end. So I think this is a super exciting space, but it is, if biotech, is volatile for, investors, this is that with some juice almost.
And you frequently hear, not just from WisdomTree, but you hear in a lot of places this idea of convergence. And in a way, the convergence of certain technologies working together in this symbiotic fashion, something that I think of in the drug discovery area, where I think you know, it might be around a 4% chance of success. You come up with a molecule, and to get end to end to the point where that molecule is actually being used in a fully approved therapy that actually works, you might have a 4% chance of success. It might take $1 billion. It might take 10 years, maybe a bit more than 10 years. And it might have taken a certain number of years to even get to the point where you have that molecule. And so you think of the things that are happening today, gene sequencing, getting that genetic data is easier. We're getting faster and faster. It's becoming more and more efficient. You think of something like quantum computing. Blake and I love quantum computing. I wouldn't say we understand it in every detail. We're not quantum physicists. I personally think it's one of the most fascinating topics out there. But you hear a lot about how if your idea is to simulate chemical reactions, molecular interactions at smaller and smaller levels, utilizing the power of quantum computers, once they are, say, commercially available, you're able to keep stable something closer to, say, 1,000,000 qubits, which we're not quite there, but there are companies like IonQ, which we're excited about. But again, that's an example of a longer term thing where you just don't know when we're going to have those appropriate breakthroughs. There are certain things in artificial intelligence and megatrends in general. Some things like the spending on data centers and compute resources, we're pretty sure that's happening. That is a reality. A little bit further down the line, we're pretty sure that companies are putting AI into edge devices, largely laptops and cell phones. So we're pretty sure of these things. You start getting into quantum computing, you start getting into drug discovery, you just have to recognize the degree of risk, the degree of uncertainty. Now, that means the return potential, if you get it right, is higher, but you just recognize you may not see results in 2024, 2025, 2026. You have to have that longer horizon. Now, Blake, one of our favorite ideas to discuss, and unfortunately, the performance in this environment where, again, we're up against the backdrop where it feels like each time the U.S. Federal Reserve comes together, the expectations of a lowering of interest rates gets pushed a little further into the future. It doesn't always work great for, say, our cybersecurity AI focused companies, many of which are new, more emerging, not necessarily taking their revenues fully through the income statement to positive profits at the bottom, at least not yet. So interest rates are certainly a factor, but was curious, Blake, what you're seeing in the cybersecurity space as we move into the second half of 2024.
I think it's quite apparent what's been happening in the cyberspace. I mean, you're starting to see more and more hacks. You see more and more events coming up that are making it become a much larger priority, especially given how important data is. So if everybody's investing in AI, a lot of their proprietary data ends up becoming their edge. So a lot of firms, why the firms are paying to bring the AI to the enterprise, paying for all the different possibilities are out there, partnering with Microsoft, partnering with ServiceNow, partnering with all these other mega cap firms that have these AI offerings, is to leverage their own internal data. And if your internal data isn't protected, that's a serious risk. And with AI now, it's not only great for good actors, but it's also great for bad actors. So with how intelligent artificial intelligence can be in terms of its adaptability to identify opportunities as well as risks, you're starting to see a world that is where you're seeing the bad actors becoming more and more sophisticated, and you're starting to see the good actors using AI to counteract that in a sophisticated manner. So you're almost reaching a point where you're going to have AI battling AI to get in versus to prevent somebody from getting in. So it's quite an interesting evolution, but it is showing how important this space is. And even if it is volatile, it is something that companies are prioritizing, and essentially is a necessity moving forward.
Yeah, part of what you see is you see certain intersections. I know in the case of CrowdStrike, they released Charlotte, which I don't know if Charlotte itself actually does any securing on its own, but part of cybersecurity is being able to communicate, being able to be efficient, recognizing that in today's world, if every company said, we have the budget, we want to fully staff up across our cybersecurity need. We want to hire the quote unquote ideal number of people for the task. And you step back and you say, could we even do that? There's not enough global people with the right skills to do it. So, what that means is it's incumbent on every company to have a strategy to be as efficient as possible. And what I saw in the online demo of Charlotte, so I recognize personally I am not WisdomTree's chief cyber officer, but the online demo was compelling in my case because I could actually understand it. You see a question get asked, what are our vulnerabilities in Microsoft Outlook? So I know what Microsoft Outlook is. I know what a vulnerability is. I can write that sentence myself, not being a cyber expert. And the system actually says something that, again, appears as plain English. You currently have 28 vulnerabilities. It was giving an example, and you see a list. And it would allow somebody who had the wherewithal to either patch those vulnerabilities or to get in contact with those users, whatever the appropriate procedure for that case could be, it could be undertaken. And you're that much faster, you're that much cleaner, you're that much more observable. This idea of observability is an important element, recognizing that sometimes one of the more important things in cybersecurity is just knowing what's going on. The big hacks, the big breaches that you hear about frequently are, so SolarWinds was compromised and the nefarious actors were in the system for X number of months. I don't remember how many months exactly, but it was more than 2 months. So that's more than 60 days that someone is in the system. They shouldn't be, and who knows what they're doing. And sometimes it's also very difficult to piece together what they were exactly doing or what they did exactly access, especially in what could be termed a supply chain attack, where you're hacking into or getting access to, say, a centralized player, a centralized provider of software, the quintessential examples of which would be an AWS, a Microsoft Azure, a Google Cloud. That's why one of the trends that you might ultimately see is the most important cyber defenders in the world might very well be the cloud providers, because more and more of our resources and what we do is sort of farmed out to them. A hack, an issue at those companies stops maybe planes don't take off in a particular city because they're in AWS and AWS went down. I mean, it is national or international global news when these companies do face an issue. Now, Blake, something for our last topic, because I am keeping an eye on the clock, and I know our listeners depend on us for roughly 60 minutes every time. I heard you recently, Blake, in a discussion talk about DigitalOcean and JFrog, and I thought that was an interesting intersection. Again, these ideas of intersections, large language models with cybersecurity. In this case, it's customized models. So Blake spent a lot of time talking about customized and customization, and thinking about unique models that might ultimately be deployed by different businesses. Now, it's important to note you don't just download from Llama and go to town. You have to think about security. You have to think about the data. You have to think about version control. You have to think about a lot of things rather than just downloading Llama from the cloud or from wherever you download it from and then immediately programming it up and using it. And so I'd be interested to hear, Blake, your sort of case study about, DigitalOcean and JFrog as it relates to companies designing, developing their own models.
Yeah. So, yeah, as you alluded to, and we talked a little bit about earlier with the ML operations concept. So, if you think about, so I'm sitting here, say I'm a data scientist, and I'm tasked to say it has to do with credit worthiness or something like that. So, I'm going to take, our internal data to come up with a credit worthiness model. So, for me to do that, there's a lot of things that need to, be accessible. Not only the data in a nice, clean way, that's one thing. So that's why databases, Snowflake, and these types of offerings are so important. But not only that, do you need a quick, easy way for people to build models efficiently, which is where some of the big private firms that are out there, like Databricks, are super useful for. But DigitalOcean, in a similar notion, is offering essentially cloud hosted, super quick to spin up Jupyter notebooks. So for anybody that's a Python developer or data scientist that's building their own models internally, is able to quickly build models using a Jupyter notebook in their cloud instances. So I think that being able to streamline that process and bypass a lot of the details to get somebody started, because there is a lot to just get started here with, even just, you talk about version control of models. How about version control of the proper packages you're importing, the proper programming language you're using? There's how many different versions of Python out there? So there's so many different things that have to be aligned for the technology to work. So that's one thing, is streamlining the actual development process, and even integrating an LLM to help generate the actual code itself, like a GitLab of the world, is quite beneficial. And I think ServiceNow quoted that they were seeing, I think, 46 or 47% of AI generated code being accepted by their developers and their team. So I think that is quite impressive to put a number on, to say AI generated code is actually passing and actually being included 50% of the time in their deployments. So I think that's very profound. And then for JFrog, when you think about, you build a model, and we talked about the credit worthiness. If I want to deploy that and run that in production, so it is making decisions to lend to a client or a new customer, and actually make those decisions regularly, we need to not only test and make sure it's going to abide by our standards, but also regulatory standards. And once you test all that, that is so much effort to go from scratch, go from nothing to actually having a final model. So being able to store that in different versions. So if you are upgrading something or making changes to it, deploying version 1.1 or whatever it may be, at the end of the day, these models can sit in binary files. And JFrog does a great job of keeping all of that in an Artifactory in the cloud or on-prem, to actually store all of this data and to store all of these models to then deploy them live in production. So and they also run security over the top of these to make sure that there's no issues with them, because we actually just saw it recently. Hugging Face, somebody uploaded a malicious Hugging Face LLM model to their open source platform. So anybody that downloaded that model for whatever use case that they were seeking to employ it for, we're subject to those risks. So it's so when you think about AI in general and AI for the enterprise, there's a lot of moving pieces here, and there's an entire ecosystem that really is enabling all of this to come together to actually get to the point where we have some, productivity enhancements in our daily lives.
It is fascinating to see, and in the ETF world, we see month by month, we have our different reports for the respective regions, be it Europe, be it the US. And sometimes you might see people putting a lot of money towards, say, semiconductors, a bit less money towards, say, AI, and then they're taking money out of cybersecurity. And in our minds, I mean, cybersecurity is something, anytime we're talking about convergence of these new technologies, emergence of a new technology, you have to think you don't just put that into the wild and let it rip. That's how problems come up. It's even if software, it's not biotech, it doesn't take 10 years. You still need to take some time. And you've seen what's happened even at some of the largest companies in the world when they release a model and there are certain issues. It does affect tens, hundreds of billions of value in the market cap. But as you can probably guess, Blake and I could go on another 2 hours, but we're not going to subject our listeners to that. We've probably covered everything we can today. Again, just for people's time reference, this is early May, 2 weeks before the NVIDIA earnings announcement coming out. We've got a very nice schedule of podcasts coming up. If those remember the last one, we had Dark Trace on, which was fortuitous timing in that we recorded, and then on the day of that release, Darktrace announced and Tomo Bravo announced sort of this take private deal, which we'll see that go through in the coming months. Looking forward, we have more exciting guests similar to Darktrace that are focused on different areas of the overall thematic ecosystem. And so the key commitment that Blake, myself, Mobeen, who's not here today, that we all have to the listener is we're going to keep at it. We're going to keep coming to you with very, very interesting content, sometimes amongst ourselves, sometimes with very interesting guests that want to tell their story about the technology that they are using. So please keep coming back. We appreciate your time, and let us know any and all feedback that you might have to make this podcast better. Take care. Until next time, it's Blake and I. See you soon.